Dollar Jill. In today's Money Watch, we are talking about interest rates, which are at a 23-year high to fight inflation. The Federal Reserve Board, which strongly influences what you pay to borrow money, wraps up a two-day policy meeting today. It will weigh in on the economy and whether to change interest rates. CBS News business analyst Jill Schlesinger is here to tell us how this will affect the home and our pockets. So the Federal Reserve today, what can we expect to hear?
They're probably not going to do anything today. And the reason is that some of the most recent inflation data have come in a bit hot, stronger than expected. So I think we're at 5.25% to 5.5%. That's where we've been since last July. We'll stay there for this meeting. Probably again in the May meeting, they will not do anything. The most likely scenario is they start to cut rates at the June meeting. Right now, the bond market predicting a 50% chance that they start cutting rates in June.
So that's the impact on the mortgage rates. That's what you're thinking.
Well, that's the impact on short-term borrowing. So if you've got a credit card balance, that's where it hurts. Mortgage rates, the Fed doesn't directly control because that's based on supply and demand and other bonds like the 10-year Treasury. Right now, mortgage rates are at a 6.75% about for a 30-year fixed-rate mortgage. Now, that is not as high as it was last year.
Right.
We went up to nearly 8%, but it's not where we really want it to be to bring new home buyers into the market. Still, you know what? It is probably going to come down simply because the Fed is likely to cut later in the year.
Okay, that's the market. Let's talk about the actual industry. A recent settlement by the National Association of Realtors will change the real estate market as we know it. How could this affect buyers and sellers?
You know, this is fascinating because when we look at real estate, to pay your agent, it usually came out of the sales price.
Right.
So, 6%.
Right.
You paid the buyer's agent, the seller's agent. This settlement is due to a case that the National Association of Realtors lost last fall. They agreed to pay more than $400 million and also to change commission structures so that you don't automatically have to pay a buyer's agent out of the sales proceeds. So what does it do? For a seller, you're going to negotiate directly with your agent. For a buyer, you're going to directly negotiate with your agent. We've separated it. Could be a huge change to the industry. We may see more than half of the 1.5 million realtors that are associated with the National Association of Realtors drop out because they're not going to make enough money. This is supposedly going to put downward pressure on commissions that are paid. I don't think it'll change prices, just to be clear. We still don't have enough homes for sale. But this is a massive change for the real estate industry.
Oh, man. All right, Dollar Jill, we appreciate you.